Hello and Happy New Year. Welcome to your weekly Go No Go show here on StockCharts TV. My name is Tyler Wood. I am a CMT charter holder, and joining me as always is Alex Cole, Chief of Charts over here at Go No Go. How are you doing, my friend? Happy New Year.
Yeah, amazing. Happy New Year 2024.
Yeah, the calendar's changed over. Seems like the markets have changed over a little bit as well. Let's dive into some charts. Let's start with our cross-asset heat map, as we always do, just getting a sense of the overall picture, the trend environments across major asset classes.
Absolutely. And so you can see that we've been fairly settled for a couple of weeks now, maybe even a bit longer than that, month and a half. The trends, the go trends are in equities and treasury bond prices. No-go trends in commodities that strengthened this week, and then also, of course, in the dollar. So we're going to talk a little bit more about these coming up, but important inflection points for treasury bond rates that we're going to talk about, as well as the dollar and how that'll have a bit of an effect on the equity markets. But at the moment, the trends are in place. They remain the way they've been now for just over a month.
Fantastic. Let's turn our eye to the S&P 500, coming through the month of December, reaching all-time highs. And then, of course, a lot of folks have been paying attention to seasonality in 2023, seem to give a pretty decent playbook, or at least the markets abided by seasonal factors. And here we were coming into what was historically a strong period for U.S. equities, the Santa Claus rally, not really showing up here in the first 3 days of the year. Alex, talk to us a little bit about objectively and mechanically where we're at in terms of the trend for the S&P 500.
So yeah, as you mentioned, the end of the year, the run up into the end of the year is traditionally pretty strong. And we did see that, of course. And then it hasn't carried over, as you said, into the first week of the year. So we're going to have to see what happens going forward. But if we just purely look at this objectively using the GoNoGo charts, what we know is we're in a go trend. We've been in a go trend for a couple of months. We are seeing a pullback. We're seeing some weakness. Those aqua bars, remember, reflect weakness in the trend, but still a go color. And that, of course, comes after some of these counter trend correction icons. And these tell us that in the short term, price may have peaked and we may struggle to go higher. And that's exactly what's happening. We've sort of topped a little bit. We've come back. And now we're going to turn our eye to the lower panel and watch momentum and see what it can tell us. And we can see that it's touching the zero line. And if you know our methodology by now, you'll know that the zero line is incredibly important, because when momentum is neutral, when there's a cooling of momentum, then the oscillator will fall to that zero line. And what we'd like to see in a healthy go trend is support found at that zero level by the oscillator, just as it was here in December. That led, of course, to new highs and go trend continuation. So that's what we're going to look at again to see if we find support at the zero line. You can see that over the last month, the volume has been heavy. That's, of course, the darker blue line instead of the aqua line of the oscillator. So we've got a lot of volume. We've got a lot of trading. We're going to watch to see if we can find support here. And if we do, we'll put in a new higher low and potentially make an attack on these prior highs.
Absolutely. And as you were mentioning, those GoNoGo icons are available with the GoNoGo Trend Pro plugin for StockCharts ACP. And what we're looking at is the interplay between the trend conditions and what's happening in momentum. So when we see those counter trend correction arrows, those red arrows in a go trend, it just is interpreting the oscillator in its traditional use. We were in overbought extremes and momentum has cooled. It's not a direct sell signal or a recommendation to trade in any direction, but it's highlighting that interplay and the importance of watching momentum and whether it resurges in the direction of the trend. So right here, we're at a little bit of an inflection point as momentum has cooled to the zero level. All of the combined elements of that GoNoGo oscillator in their neutral territory. So we'll be looking to see whether bulls or bears carry the week. Alex, let's just jump this out to a weekly view as well. Give some context to that rally through the end of 2023. And I think for a lot of investors, putting undue weight on the first few trading days of the year might not be helpful to them long term. We want to be objective and remain open to the possibilities that equity markets can do a number of different things: go up, go down, or go sideways. So let's take a look at our macro factors that are impacting equity investing. Let's start with the TNX. I know a lot of newscasters commenting on how the Fed minutes struck investors as a little more hawkish than the original press conference was with Chairman Powell. So we have certainly seen rates tick up a little bit. But again, when we want to think about trends, we want to place probabilities in our favor. So from a trend perspective, Alex, where are we looking for U.S. Treasury rates?
The trend perspective tells us that we're still in a no-go trend for rates, right? So we've seen that rally this past week, but it's still painting pink no-go bars. I mean, there's a couple of things jumping off here for me that you might want to be looking at, and that's a fairly strong trend line here. We're really testing right up against that downward sloping trend line. But of course, that will likely provide resistance, right? If we know about how we do our trend analysis. But for us, what we want to do is turn our eye again to that lower panel. And this is a really important part here for the oscillator. You can see that we are now testing that zero line from below. So no-go trend in place, albeit painting weaker pink bars, and testing the zero line from below. So we've had all of this negative momentum as we expect during this no-go trend. Every time it rallies up to the zero line, we're going to watch to see if it gets rejected. And if it does, all else being equal, it will get rejected at the zero line, and then that no-go trend will continue. And then all we've got is a lower high, right? So that's totally in line with being in a no-go trend, which is never going to move down in a completely straight line. So very important moment. Of course, if it bursts into positive territory, then we're saying there's positive momentum in a downtrend, which kind of is contradictory. So then we'd be saying that's a bit more of a threat to the no-go, and we might look to see if price can break above that resistance line. But at the moment, that's the inflection, the zero line being tested from below.
Absolutely. And being objective observers, we could see a counter trend rally within an otherwise structural downtrend for U.S. Treasury rates. Alex, let's move on from the TNX. Let's take a look at the U.S. dollar. Here at GoNoGo Charts, we like to look at a lot of ETF proxies for indices just to get a sense of the volume components as well. As Alex highlighted in that GoNoGo oscillator, changing from the green color to our dark blue, and we have heavy relative volume. Talk to us a little bit about this counter trend rally in the U.S. dollar.
Yeah, something very similar. A little bit more volatility, if you will, with the oscillator going above and below the zero line, but basically a series of lower lows and lower highs. And right now, it looks like we're putting in another lower high. So pink bars, right? So a weaker no-go trend than it was during this fall over the last several weeks, but still a no-go. Quite a sizable move higher, though, right? Like we gapped higher, we've moved higher, but you can see the general movement of these lower highs as price falls, and now again testing the zero line from below. So if we are rejected here, then that's more of a confirmation of this no-go trend than it even was here when it actually went above zero before coming back below. So we'll watch this one as well.
Absolutely. And just to point out to all of our viewers, those GoNoGo icons work the same way in uptrends as they do in downtrends. So within the no-go trend criteria, where we see momentum surging in the direction of the underlying trend, so we have pink or purple no-go trend condition bars. When momentum reaches that zero line from below and is rejected, meaning surging back into negative territory, stronger negative momentum in a downtrend, we're going to see those trend continuation icons. And we see those two red circles before. We'll be looking to see here at this inflection point at the zero line whether this trend continues or is indeed threatened by positive momentum. Let's turn our eye now to U.S. oil. A lot of talk even on our show last week about what we can expect for oil here in the year ahead. Talk to us a little bit about another important inflection point. This time we'll talk a little bit about the GoNoGo squeeze, that volatility compression that we're seeing.
Yeah, really everything at the moment suggesting the trends are still down in some of these macro factors that will alleviate pressure on equity prices. So yes, we've had these counter trend relief rallies. In oil, it seems to have already finished, though, and we've moved back towards stronger purple bars as price goes lower again. But to your point, during this no-go trend, the oscillator has risen to test the zero line and really kind of got stuck there. Other than this blip into positive territory, we can see the climbing grid of this go-no-go squeeze continuing to build. And that tells us that during this sort of sideways movement off this low in December, there's been very little directional momentum And so nobody's really winning that tug of war between buyers and sellers. So we're going to want to see a significant break, either here back into positive territory or back below into negative territory, which will really help us determine the next direction for price here of oil.
Absolutely. And let's check on our shiny friend gold real quick in the other commodity space for precious metals.
I like that, our shiny friend.
Our shiny friend.
Okay. So gold in a go trend. You know, we saw another higher high, barely higher high, but we did see a higher high. But as you might expect, with a very, very slight higher high, we did see some divergence with the oscillator making a lower high. So that is bearish divergence, of course. But we're going to watch now and see what happens to price as the oscillator tests the zero line from above, because if it finds support here, then this may well be a higher low. So go trend in place, weaker aqua bars, oscillator testing support at the zero line. So this is looking a bit more like the equity markets to me.
Absolutely. And as we looked at that on very long-term charts and the blow off top right there at the beginning of December, as it was reaching those all-important $2,000 an ounce price levels, we certainly can see that this rally is persistently retesting that area of overhead supply and looking for that breakout. I know all the gold bugs out there are certainly rooting for us to break into all-time highs and surpass those levels. So Alex, let's turn our eye back to the equities space. Let's check in on a couple of other indices here within the US before we move to our sector rel map. Why don't we pull up a chart of the IWM? We often talk about the S&P 500 as the benchmark index for US equities. That's the large cap 500. Importantly, through that December rally, we saw that small cap names started to outperform our benchmark index. We saw strength in the Russell 2000, and we saw some really important trends taking shape. After that rally, we're seeing that same cooling period. Talk to us a little bit about where we're at for key levels here on the Russell.
Yeah, I mean, it's quite a sharp fall over the last 4 or 5 days in these small caps, but you see how they've fallen to a level that should act as support. That bottom of that gap that we saw back in mid-December, that could offer some support. And then we look towards the oscillator, and guess where it is? It's at the zero line. So we always talk about this as being a very interesting time when so many of the charts we look at are at the zero line. There's inflection points everywhere, and really we'll watch to see in which direction things resolve. And we'll see that by these oscillators coming off the zero line. So will it rally back into positive territory, in which case all fine and good, and we'll see go trend continuation for a little while? Or does this move into negative territory and break below this support level that you see on the chart?
Absolutely, and I think the central element of technical analysis being a way to visualize investor behavior. A lot of these charts make a lot of sense, Alex. We had a very strong, pronounced move throughout the month of December, and markets are digesting those gains, making sure that investors don't get out over their skis too far or get ahead of themselves in terms of anticipating better economic news or potential for more Fed cuts. So let's turn our eye now to the sector rel map of the S&P 500. As we do each week here on the GoNoGo show, we like to take a look at relative strength performance as well as these absolute trends. And with relative strength, all we're looking at is the ratio of each of the 11 sector spider ETFs against the benchmark index. And that relative performance, we're still going to apply that GoNoGo methodology, but to the ratios of those sectors as they're performing against this go trend in the S&P 500. I'm seeing some turnover. I'm seeing some rotation. Talk to us a little bit about what's on this heat map.
Yeah, we definitely seen a little bit of change this last week. We're losing the go trends in those tech sector, sort of the growth sectors, technology rolling over to paint strong purple bars, as well as discretionary, joining communications and energy there at the top of the map, but that middle still holding on and actually adding healthcare this week. So we've had financials, industrials, materials in the middle of the map there, making those go trends, but now we're seeing a relative go trend in healthcare as well, which is interesting. And of course, real estate continues to paint strong relative go bars.
Absolutely. I think that that emergence of the healthcare sector back into relative strength against the benchmark has caught the attention of a lot of the analysts that we talk to every day and every week. So let's take a look at the XLV just on an absolute basis first, and see where we're at from a trend perspective and pure price action on that healthcare sector of the S&P 500.
Yep, and look at that. I mean, this is what a sharp rally we've seen here in healthcare. So that's quite an amazing right side of the chart, really racing away higher highs. And you can see the oscillator bounced off support really strongly here a couple of weeks ago, and that gave us that go trend continuation as we raced then on to higher highs.
And we see volume picking up here in these last few days as healthcare diverges from some of the darlings of 2023 in the healthcare, the technology and the consumer discretionary sectors. So now, as we like to do, Alex, let's take it down another notch and look under the hood of the healthcare sector. We can look at the industry groups that comprise this sector ETF and see where that strength and outperformance is coming from. As we were looking at this map today, those colors on the far right side have been flickering or changing. We are here midday on Thursday, January 4th, and indeed trading continues. So we will see those colors change to reflect the trend conditions during the trading period. Once today is closed, those bars never repaint or adjust in any way. But I'm certainly seeing in that fourth panel from the top a lot of outperformance from the biotech sector, correct?
Yeah, biotech has really come back. You can see that now for a couple of weeks. Medical supplies was this top panel, and this was painting aqua bars most of the morning. Now we're seeing that amber bar creep in, so we'll watch that one. But it's really been biotech for a couple of weeks now that's leading that relative outperformance in the healthcare sector.
Absolutely. Well, why don't we spend the back half of today's show talking through a few of these biotech names, small, mid, and large caps that investors might want to pay attention to. And let's start just with the ETF of the biotech sector, the XBI. We can take a look at the industry group as a whole and see how that price performance is playing out as well.
Yeah, one second.
Yeah, no problem. So we're seeing positive momentum as Alex and I like to do. There's only three important questions that we need to ask ourselves as investors. One is, what are the trend conditions? So that composite blend of technical indicators covering price action. We do see a positive go trend in its weaker form. That's those aqua bars. We want to know where's the oscillator at, and we see positive momentum at a level 2. So plenty of room to run. It's not overbought in any way. And then that third question that we always ask ourselves as investors is there anything important happening at that zero line? Any inflection points that we need to pay attention to in terms of our own risk management? And indeed, we've fallen from overbought, but not even approached the zero line here on the biotech sector ETF, the XBI. Alex, let's turn our eye to a few individual names. Let's start with Neurocrine Bioscience. That's NBIX. And I don't know, maybe it's the New Year's resolutions. Everybody's trying to biohack their life, become more productive, maybe lose a few pounds of those holiday treats that we all enjoyed. But this certainly seems like a go trend to me.
Yeah, some of these charts we'll see now over the next few minutes are really, really strong looking. You can see the indecision here, the choppiness as we went sideways. And look at that max go-no-go squeeze that was in place at the end of November. And then even into the very beginning of December when it was broken on heavy volume. And then we just raced away since then. We found support at 0. Price has gone higher, strong blue bars. So really strong looking charts in the biotech sector. Definitely this one, NBIX, looks really good.
Let's take a look at Amgen, AMGN.
Yeah, another one. I mean, we did see this period in November, December, where it wasn't as strong for these securities as the rest of the markets, right? We saw the November, December strong in the equity markets, but recently, sort of really since the beginning of December and then into the first week of January, these securities have really taken off. Again, max squeezes while price just sort of makes up its mind. We see the sideways action. We see the squeeze in place. We really want to wait for that significant break of the squeeze And then the trend follows with painting the aqua and the strong blue Go bars. And you can see that multiple Go trend continuation icons as we set new highs for Amgen as well.
Let's take a look at Vertex. And I think the main point to highlight here is the divergence just over the last few days as markets have cooled, corrected, or digested some of those December gains, where we see acceleration on the back of December gains. It's really quite exciting to pay attention to a few of these names.
Yeah, same thing here, really. Much more sort of volatile movement in this chart. But as you were saying, the last few bars really counter to what we're seeing in the equity markets.
Absolutely. And let's take a look at Regeneron Pharma. REGN is the ticker.
Yeah, just, I mean, amazing, right? To see the same kind of chart popping up over and over again. Lots of sideways movement and then a strong breakout of a max go-no-go squeeze. And now already having found support there at the zero line.
And let's bounce that out to a weekly basis, Alex, just to get a little more context on these trends. We're certainly not coming to the end of any of the games here, as we see those trends really continuing to persist and even accelerate to the upside.
Absolutely.
All right. Not all biotech firms are created equal, Alex. Why don't we take a look at a few that are in no-go trends? And I think for a lot of the sector analysts that we talk to, they always have their list of longs and list of shorts. We want to be able to differentiate. So let's pull up LEGN as a ticker symbol.
Yeah. I mean, there's just so much talk about how, it's not a stock picking market anymore. Or, you can't worry about stock selection anymore. It's really not the case because biotech outperforming, but there's plenty of biotech stocks you should avoid, right? And there are some that you should be looking for to take advantage of that outperformance. There still are some definite opportunities within stock selection. And if you could just look at the difference in this chart, such a strong no-go trend and continued no-go trend continuation icons for LEGN Biotech.
And not to go too far down the rabbit hole of market structure, but the point that you were making, a lot of investors see the proliferation of ETFs, a lot of index holding or even sector holding. And when we see that kind of activity, the rising tide that lifts all ships really holds true in many ways. So when you see a chart like this of a security that's within the industry group, that's outperforming the sector, which is outperforming the index, and it is so divergent from the rest of what we're looking at in the biotech space, certainly something to pay attention to, right? Yeah, and I'm not here to tell you exactly what the fundamental reasons are behind LEGN's biotech price action, but certainly we can see that investors are avoiding this despite all of those tailwinds of being in such a strong industry group. Yeah. Let's take a look at Halozyme Therapeutics. I have no idea what these companies do. Hopefully they're not, hopefully this is not the beginning of the end, right? Another no-go trend, and we've got negative momentum on strong volume, heavy relative volume at a -3, painting those purple bars. So big differentiation from what we were seeing in the other biotech spaces.
Yep.
Alex, the last one that I want to look at in biotechs is Merck, which is now trading at all-time highs, and a pretty important one for all of us to pay attention to. Certainly when we see a parabolic move like this and an extreme overbought level on the GoNoGo oscillator, we might all start thinking about mean reversion and the fact that this will resolve in one way or another. But for a lot of trend followers, that overbought extreme can be a very bullish sign. And let's pull this one out to a weekly or a monthly view as well, just to see how far we have come.
Yeah, I mean, this is
we have to go.
This is really breaking out, right? Like if you just pull this chart back and you keep pulling it back, you see these movements outlined by the Go colors. And then now, where are we? We've had a correction, we've had a pullback, but we are really testing that all-time high. And, like we say all the time, don't let the top of the chart fool you into thinking it's resistance, right? If we can close higher than this, then there's nothing really above.
And I think that that common pitfall that many of us fall into, oh, there was a big rally in biotech, I've already missed it. And so looking at a weekly chart to see this is still in amber neutral trend conditions. We are just getting started on that weekly time frame in perhaps approaching a go trend condition. So word to the wise, it's important to look at multiple time frames and not psych yourself out that you've already missed the move in such early innings.
We all remember missing Bitcoin's move to 3,000.
Very well said. Yes. Alex, the other area industry group that that you mentioned were medical supplies companies. Let's pull up a few charts of names in that industry group, which was also a relative performer up until today. We can start with ICUI.
This one was interesting because it's coming out of such a strong move lower. And then when you look at it on the daily chart, you know, could this be a turnaround story, right, for ICUI? Just a really consistent, strong no-go trend. But then we've emerged from it. We've sort of broken above the horizontal resistance here, and we're painting go bars. And if you turn your eye to the bottom chart here, you can see how we've broken into positive territory and have been finding support there. So now positive momentum, we're testing that zero line again. If this holds, then perhaps we'll see a continuation of this go trend on a daily basis.
And so unlike the biotechs, not in a runaway breakout here, but perhaps very early innings for some constructive activity. Let's take a look at another one, STIM, Neuronetics Incorporated. I'm not sure how I feel about all of these companies just tinkering with what's between my ears, Alex.
Yeah, well, I don't know. Maybe it may help me. But yeah,
another philosophical conversation for a different show.
Yeah, you know, very similar picture in that we've had a no-go trend, making lower lows and lower highs, and then when it finally starts to turn, you can see how it was sort of led by momentum first, momentum crossing above the zero line, then finding support at zero, and now continuing to find support, volume picking up. You see that with the dark blue line as we make these higher highs and higher lows. So again, at zero now, looking to see if we find support potentially to take out those prior highs.
Absolutely. And just even look at that today's bar. Getting much lower and coming back to close higher. In terms of short-term investor behavior observations, that's fairly bullish. Let's take a look at another final chart here for today. Cencora, and the ticker symbol is COR.
Yeah, another great looking chart. I mean, this one not coming out of such a long downtrend, you know, really more of a correction within a larger uptrend. So we can see how we've already gone to new highs. We can see the amount of support found at the zero line. This is a much more established go trend, but looking pretty good on the daily. And if we take this one out to the weekly, you can sort of see how persistent that's been just by taking this back, you know, for a long time. Right, we've got about 4 or 5 years here of a go trend and new highs and continuation, breaking out of squeezes. So all good things on a lot of these medical companies.
Absolutely. Well, for all of our viewers, we want to wish you a very happy new year from GoNoGo Charts. Appreciate all the feedback that we have gotten throughout the last couple of years. Hopefully these tools are providing some value to you as you avoid the analysis paralysis, try to simplify the rules that you follow, perhaps following them more closely. I know in our household, we got very rule driven here at the start of the year in terms of taking care of our health and well-being. So to all of you, wishing you a very happy and prosperous 2024. We will be with you every week, Thursday afternoon. And until next time, take care of each other and trade them well.